The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XPX index is trading at $46,920. Bitcoin sliding down over 2% over the past 24 hours. Looking at the CoinDesk Ether price, ETX index is at 3,770. ETH also falling about 5.3% for the day. The DFX CoinDesk DeFi index is at 377 points, sliding back about 6.5%. Joining us now to discuss the crypto markets is Clay Gardner, co-founder and co-CEO at Active Investment Manager Titan. Hello there, Clay. Thanks for joining us. So, what's your active management strategy in this sell-off? Is it buying Doge? Is it are you buying crypto? Is it time to buy?
Well, thank you, Christine, Lawrence, and Emily for having me. Maybe some context. So Titan Crypto is an actively managed portfolio of crypto assets that we believe are positioned for long-term returns with minimal correlation to U.S. equities and some attractive hedging qualities. And so our strategy is primarily to identify what we believe to be long-term winners. So winners over the next 3 to 5 plus years. And we're identifying those winners by what we believe to be fundamental research, looking at on-chain analytics. We're monitoring news flow. We're active in many of these social media communities, trying to understand the teams behind these projects, the real utility and use cases that are manifesting themselves. And so we're trying to balance that long-term perspective and philosophy with what is inevitably a lot of short-term noise. So we like to say we're macro aware, but we're not macro crypto investors. So we do pay attention and understand things like, I can tell you, so what we believe can be the winners over the next 3 to 5 years, we're really excited about layer 1 blockchains in particular. It's interesting. Coming into 2021, you still had a lot of institutional investors on the fence about crypto. And I think over the last several years, you started to see them go from, crypto is a career risk to it's almost a career risk not owning crypto. But the reason we're excited about layer 1 and layer 2 blockchains in particular is that we believe a lot of funds are sort of now leapfrogging Bitcoin, and they're jumping straight into layer 1 protocols. So Ethereum, Solana, Terra, Avalanche. And the reason is, if you think about these layer 1 blockchains, the reason the funds would skip the Bitcoin and go for the productive layer 1s is you've already seen those layer 1s as a percentage of total crypto market cap eclipse Bitcoin. And the reason is you're finally starting to see a lot of the R&D of the past several years manifest itself. And you started to see a peak of frustration around the cost of Ethereum as well in terms of gas fees. And so however you look at these layer 1 blockchains, and I mentioned a few of them, some of which our clients have positions in with Titan Crypto, whether it's number of users, whether it's total value locked, you're continuing to see these metrics grow exponentially. And you're also now starting to see somewhat of an on-ramp, the connective tissue between those layer 1 blockchains and many exchanges. So for example, a lot of exchanges starting to offer the ability to directly deposit and withdraw into layer 1s, bypassing Bitcoin or ETH entirely. So we're really constructive on layer 1 blockchains as well as a number of other assets. And I think it's really just about balancing that long-term perspective with what is a lot of short-term volatility, especially over the last few days.
Clay, as we're approaching the end of the year, do you have any price predictions for 2022 Bitcoin or Ether?
No price targets specifically for the next year. Emily, I think crossing the chasm is the way I would have described crypto over the last year or so, going from macro speculative asset to one that we believe is increasingly driven by fundamentals. And so I think what's going to change in particular, if anything, over the next year or so, is you're going to start to see a lot of crypto investors who previously saw crypto as a speculative asset, one based purely on technicals. So you're going to start to see a lot more investors value these assets, almost like traditional assets, maybe not with discounted cash flow models, but a lot of the relative valuation frameworks that I'm used to using as an equity investor. And I can talk about what some of those are. And so, no specific views to give on Bitcoin or ETH or any other coin specifically. We are constructive. We believe it'll be a great year for crypto. We believe talent's pouring into the space. You've seen VC funding in crypto over the last 11 months surpassed crypto funding by VCs over the past decade. And those dollars are going to get deployed. And so I think overall crypto market cap should be higher and could be significantly higher over the next several years. Perhaps we want to talk about our position in Coinbase for our flagship clients. We believe that's another way to get exposure to that crypto market cap upside. But I think it's just going to be another really exciting year in terms of the pace of development and then the amount of adoption that retail investors are going to be able to have in the space.
So, Clay, getting back to your discussion about leapfrogging into the other layer ones besides Bitcoin, if we're going to talk about relative valuation, won't in many ways Ethereum get a lot of the attention of those people who are, or most of the attention of those who are leapfrogging, if just because it's something that they kind of know a little bit better. It has the so-called network effect, if you will, that some of the other, even the Solanas of the world might not have to the extent that ETH does. Do you think that ETH might, in many ways, outperform some of these other smaller layer ones over the course of, let's say, the next 12 months while investors sort of get their feet wet and try to figure out what's happening? Or do you think that we might see some outperformance from some of these other layer ones?
I mean, that's a really great question, Lawrence, because ETH is still the largest decentralized operating system. In many ways, we think it's the most battle-tested blockchain in the world, and so that security layer will anchor a lot of the next iteration of the internet, what we're talking about with Web3. But in particular, when it comes to valuation, I think it's a really great point because, again, as an equity investor, you have cash flow. That's like the ultimate arbiter of like productive value and utility. You don't really have that for most crypto assets and even layer one blockchains. What's unique about ETH is, you do have gas fees, right? And so, one quick example could be, the last 30 days, ETH generating about $1.5 billion of gas fees. And so that's about $18 billion of annualized gas fees. If you take the market cap of roughly $450 billion, divide that into the $18 billion of annualized gas fees, you get sort of a 25 times multiple. You can call that sort of an EV to revenue or a price to earnings multiple. That's roughly equivalent to what we're seeing in the high growth software as a service camp today. So, software as a service companies trading on the public equities exchanges, growing 30% plus are trading around that multiple. And obviously ETH is growing leaps and bounds faster than that. So that's one example of a valuation framework where I think if you're an institution and you've been participating in equities and macro, et cetera, that's a pretty ascertainable framework you can sort of get comfortable with. The more you get into other layer one blockchains that don't have quite as tangible a framework for sort of value and utility, you have to be a little bit more cute around relative valuation. So, for example, market cap to total value locked, or market cap to daily active users or daily active addresses. So it's not as tangible. You're sort of making, obviously, a leap of faith and a bet that the growth of those underlying user and transaction metrics will ultimately manifest itself in some sort of cash or fees-based revenue stream. But I do think that a lot of institutions, ETH could be the new Bitcoin in many ways, right? It's like it is the new on-ramp for funds that do leapfrog Bitcoin, jump straight to more productive layer ones. But I don't think it'll be the end of the development for layer one blockchain development and investment interest from institutions, even if they go straight to ETH
Clay.
in the coming